Welcome to the Ambitious Bookkeeper podcast. I'm here again with Alyssa, but unfortunately we're not live in person, so you're just going to have to deal with the video screen. But hey, Alyssa, how are you doing?
I'm good. Happy morning and happy whatever day this is. And I'm really excited that this is going to be on everybody's ear. And I can't wait to go over all the results and stuff today.
Yeah, I'm super excited. We just closed results on the state of the virtual bookkeeping and accounting industry survey. Really wish I could figure out a shorter title for that. It's so hard to it's a lot to say, but there's really no way around it.
Yep.
It's just how it is. Because we didn't necessarily want to be like the state of the bookkeeping industry, because we're specifically talking about a sector of the bookkeeping industry, which is the virtual one. There's still a lot of people that are not doing things virtually the way we are. And so we're, in this online world, we wanted to get that subsection of our industry. So anyway, yeah, we just closed the survey yesterday or the day before at the time of this recording. So we're gathering all the data and we're really excited to share some of the results with you all. And if you're interested in getting the report, we will link it in the show notes, but you should be able to still just go to the links where you would have taken the survey, which is ambitiousbookkeeper.com/survey or workflowqueen.com/survey. And you can opt in for the PDF of the results. So anything you want to add to that?
Yeah. So just a little bit of context. This is year 2 of the survey. Last year was the first year that Serena did the survey. She did it solo last year, 2025. This year, she brought me in to help her with just bringing in different perspective and a different angle to some things, which has been really exciting. So this is the second year. And just to give everyone just a better understanding, is every year this is only going to get better and better, bigger and bigger, and more information. But the more people know that this is coming every year, the better it can be. So the more data we have to see the progression of, because I'm curious, did we pull up last year's reports? We didn't even think to pull those up this morning if we want to go through those as well, because I think that'd be really cool for people to see what was last year. I know that we had a little bit more opt-ins last year to take the survey than we did this year. Also, guys, we did the survey, like things that we learn all the time together, is we just picked probably the wrong time to do the survey. We started it in the summer, which we probably should have done a little bit sooner, but we learned these things. Data doesn't ever lie. Data lets us know exactly what we need to do. So other than that, it's the second year that we're doing this, and we're excited because now we have a comparison against last year, and then we'll have a comparison next year and the year after. So we're just really excited to bring this data because it's really just going to help everybody here make certain decisions within your firm. And you might not know how to make those decisions. That's kind of what we're here to inspire you to do today, is as we start going over the results and start dissecting it, you guys will start to see how we come up with ideas of how we would solve that problem, or how we would come across and position something differently to have a little bit more success. So I'm really excited.
Me too.
One other benefit is we hit record. If anybody listened to the podcast last year, we spent 2 hours recording this, same thing, but for last year's results, and we never hit record. So this year we are so proud to say we've hit record.
We're learning lots of things this year. Another thing I want to add about comparing previous data is we added different questions this year, and we made the questions more clear. So some of the answers that we have for this year, we don't actually have a good comparison for last year. So we'll try to pull up comparisons where we can, but going forward, I think it's going to be a lot better. And to your point about the timing, last year we got more responses. And when we were looking at that last night, when we were prepping for this, I was like, oh, we had it open for an entire 30 days, a whole month, rather than this year, only 15 days. Or how come not so many people responded? And then also it's just a different time. Last year, we ran it through the whole month of May before people are getting into the summer months and vacations and, downtime and all of that. And so I think that played into it as well. But regardless, we're really excited about the amount of responses we did get. We were able to donate a total of $471 to the Make-A-Wish Foundation. And so we also did that last night, and that was exciting. So yeah, I'm really excited to dive into the results. Okay, so this year, like I said, we had 471 total responses versus last year we had 645. So a little bit of a smaller response pool, but I think the quality of the responses we got were overall probably better because the questions were better.
Yeah,
And
way
the
better.
quality of your life is determined by the quality of your questions.
Yes.
So this year, one of the questions we asked was the makeup of your firm, basically. Are you a solo firm owner? Do you have a small team, and what size team type of thing? So this one, the question was designed a little bit differently. But this year, 46% of the responses were solo firm owners, meaning no team whatsoever. And last year, that total was 56%. So that has gone down. People are realizing, I think, that it's really difficult to run things on your own.
Yes.
You're
Even if it's
capped.
one person, like sometimes it's like one person doing 2 to 3 hours a week, like goes a really long way.
Yeah, absolutely. Anything you want to add about business structure? We're going to dive into like more of the weeds probably like as we go through the results, questions will come up. But the next largest piece of the pie on the business structure is a firm owner with a small team of 1 to 2 people. That came in at 32%. And
Mm,
then a team of 3 to 5 people, which we consider a growing team, was 13%. And 2% of the people that responded were just getting started. So they don't have their first client or anything. So we're kind of, removing them from that pool. And then 5% were firm owners with an established team, meaning 6 people or more. And so I'm really excited to kind of dive into the differences between a firm like that versus a solo
yeah,
firm where their profitability ends up, where, how long they've been in business, how much they're working, the firm
yeah.
owner. So, yeah.
I'm excited. Can we start diving into some questions? Because now I have
Yeah.
one. So for the
Good.
people
Good.
who are at 6+ team members, what's their revenue range? And by the way, guys, one of the things that we're doing right now is we're leveraging AI, which has been so fun to do this time around to actually help us to be able to extract this type of data because a simple report sometimes can't give you the dissection between the two. So that's essentially what Serena is doing some research, which has been exciting to see how we can like leverage this.
Last year, it was really difficult to get a report that I liked. I tried to outsource it to someone on Upwork, and it just was not. It didn't. It didn't turn out the way I wanted it to. And now that we have AI, it's gotten so much easier to be like, oh, this is how I want the report to look.
Yeah, because then
And
you can go
like,
back. You don't feel guilty for going back and forth 10 times asking someone to change, tweak, change. Like now it's like I can have AI tweak and change and get to the end of it, then outsource it to someone to make it better, you know?
yeah, exactly. Okay, so 500 plus revenue range. These are okay, here these are the revenue ranges for the 5% people that had 6 or more team members. 58% of them were at 500K or above in revenue.
Checks out.
20% were between 250 and 500K. 16% were between 100K and 250K. That one, I'm interested to dive more into that because that seems a little.
Definitely. Yeah, for 6 team members, unless here's the downfall. When someone's filling out this data, so if anyone listening is like, I have 6 contractors working 5 hours a week, that
Mhm.
might be a different situation than someone who's working. Because in my mind, I'm always thinking of like the larger, so the team members like more committed to the company, more 20 hours plus is probably in my brain. So I'm really curious why someone's carrying 6+ team members for 100 to 250K. How much is the founder working?
I'm going to get to that in 1 second. There's one more group, 25K to 50K, 1%, or sorry, 4%, which was one person responded. So to me, that means either A, you are building before you have the revenue to support it. Maybe they're a startup. We don't really know. We can dive into that by looking at how many years they've been in business,
Yeah.
or your pricing is really off. Or maybe that was just a mistake of a click of a button because it
Yeah.
was one person. You know what I mean? You never really know. But yeah, what was your question? Hey, I have a special ask for you. Have you ever looked at an industry report and thought, this doesn't reflect my business at all? Same. That's why last year I created the State of Virtual Bookkeeping and Accounting survey specifically for solo bookkeepers and small virtual firms like ours. And this year, I'm bringing it back, teaming up with Alyssa Lang, the workflow queen, and we're asking you to respond to the survey, and we will be donating $1 to Make-A-Wish Foundation up to 1,000 responses. Last year, we got 645, so we're reaching for a bigger goal this year. The survey is anonymous, it takes less than 15 minutes, and like I said, for every response this year, we are going to be donating $1 to the Make-A-Wish Foundation. Head over to ambitiousbookkeeper.com/survey to take it now and help shape the future of our industry for all of us. That's ambitiousbookkeeper.com/survey. We will be closing the survey June 15th, so make sure you get your responses in and you'll get a copy of the results when they're available. Thank you so much. Now let's get back to today's episode.
So my question is the founder. So specifically, how much are the founders working? If they're doing right now, 58% of people who are 6+ team members, 58% of them are at 500K in revenue. Right. I'm curious how much the founder's working in that firm specifically, because that's the most attractive number of those 6+ team members. 58% of them are over $500,000, which in my opinion actually checks out. Like it checks out that someone working, having that many team members typically would make more because you have more room to grow. And I think a lot of people look at team members as this massive cost, which yes, they technically are. But if your team is not producing revenue for you, not all roles can, like assistants usually don't produce revenue, but bookkeeper should be technically producing you more revenue and more capacity, you know?
Yeah. Or unless you're like really doing it to buy back your time. Like that's kind of my deal. Like I could take more profit from the company if I wanted to, but I'm really just interested in it being like a passive thing and buying back my time. So, okay, so here's the breakdown for the owners at 500K with 6+ team members. 14% are working under 10 hours, which is really cool, which means they're treating this as more of a passive investment.
Well, yeah.
And then 21% are working 20 to 30 hours. That's not bad when you consider compared to like working in corporate, you know. And then 42% are working 30 to 40 hours. And 21% are working more than 40 hours. So that line item, that kind of sucks. I don't want those 21%.
I'd be curious to see. I know we're getting like, now we're starting to really drill into it, but what I want to produce here for anyone listening is, because obviously a very small percentage of people who fill out the survey are at $500,000, but I know that a lot of people, it's attractive to have more revenue coming in. But what we're trying to dissect right now for everyone listening is to understand the majority of how much time a founder should be in, but also that doesn't really dictate how much time that you should be spending in it. Because if someone's working 40+ hours with 6 team members at 500K, that, in my opinion, there's probably not good systems. We probably aren't leveraging the right efficiency tools. I'd be curious if we can drill a little bit more into that around the founders and how much time that they're actually spending. Like, what is their did we ask the profit margin this year?
We did. Yes. I'm asking that question right now.
We're on the same wavelength here. I'm like, I want to see what their profit margin, especially, I'm very curious about the person. Are we running it where every group of hours that people are working to see each profit margin per group?
Okay. So it looks like the profit margin breakdown for the owners at 500K with a 6+ team members are 28% or under 20% profit margin. And this is bottom line that we're talking about. Hopefully people understood that question. I tried to be pretty clear with it, but there's always a risk.
Yeah.
However, I will say, if you're listening to this, there's no judgment. But if you have difficulty understanding profit margins and things like that, you belong in my Elevate program, because this is where I teach these things.
Yeah.
And your clients are looking to you to answer these types of questions. And if you're not comfortable answering them about your own number, it's going to be very, very difficult to be able to advise clients and feel comfortable in reporting their numbers to them. Okay, that's my little side.
Love that.
I needed 40% profit margin, 35%. Almost 36% of those people had a 20 to 40% profit margin.
Okay.
And then 21% of them are at 40 to 60% profit margin. That seems wild to me. That's really good. That's a very healthy profit margin to be at, meaning that those people are bringing home not $500,000. They're bringing home 250K around in profit, which is awesome. I would hope that you're at that level.
Yeah.
And then 14% of those people are at a 60 plus percentage. That piece, that one is wild to me and makes me feel like maybe they thought we were asking about gross profit
Yeah,
margin.
gross. That's because a lot of these numbers that I'm looking at behind the scenes and where we're taking in the forms, a lot of these numbers are like insanely high, like 90%, 95%. Like I think some people may have thought it was gross, and that's just something that maybe next year we say bottom line rather than
Yeah,
overall. I think that might have just confused people. But things we learn, guys,
yeah,
we learn every
yeah,
single year. But let's just
absolutely.
take it at face value. We'll say that whatever everyone answered is exactly what we were assuming, so we can dissect this a little bit more. So now that we know that of the 500K people who are having 6+ team members, about 21% of them are actually doing 40 plus hours. Can we drill into the people who are working 40 plus hours with that team? Tell me which bucket they're in for their profit margin percentage.
So there was only 3 people in this group, and their margins are all over the place, but the average is 34% of them working, of the ones who are working 40 plus hours.
Is 34% really worth working 40 plus hours a week to make 500,000 that you barely take anything home? You know what I mean?
Yeah, I mean, if they're used to work where they worked a lot.
Yeah. Sometimes when people work in that capacity, they love working that way, which I get. Like me and you, I know that we both can drown ourselves in work and in what we do. I just like to have a choice of when I do that. I don't like
Yeah.
being forced.
Yeah. Plus, like the other thing to consider is that was the top, actually, that wasn't the top option. We had an option for 1 million in revenue, right? So nobody
Yeah.
chose that.
Yeah.
But they could be between, was one of our options between 500K and 1 million? Probably not, because it said 500K
It's
plus.
500K plus, nothing else. We should have
Okay,
probably
so we
more,
can really give
more options.
another bucket.
Yeah.
So say those 3 people that are working more than 40 hours a week, say they're at 1 million. It
Yeah.
might be worth it to work to get that profit margin if you're making $1 million in revenue.
Oh, totally.
It's all kind of relative. But when you compare that to, someone making, yeah, that 60% profit margin at that revenue range is pretty, I don't know, unlikely. That was probably a gross profit margin,
Yeah.
but that would be super worth it.
I'm also curious of the people who are making 500K plus if they're the breadwinner, because that was a new question that we added this year. For anyone listening, that was something
Yeah.
that we didn't do. And I was driving and I remember messaging Serena. I was like, dude, we should ask people, are you the breadwinner? Because we both realized that if we ask that question, I'm not saying that people who aren't the breadwinner don't take their business serious. This is not what I'm going to say. But when everything is falling on your shoulders, you sure as hell push your business way different than when something is on someone else's shoulders and you're building something else simultaneously. Like you almost always have a fallback in a sense. Like I know me
Yeah.
and you, we both are the breadwinners. Well, I don't have a person to split my bread with other than my dog.
Carly.
My dog's gonna get all my inheritance. But anyway, so for me, it's like it's do or die. Like if I don't work and I don't push this thing, I don't make revenue. But at the same time, I don't need as much revenue because it's only me. So
Yeah.
but I also don't have a fallback. I don't have someone to fall back on.
Yeah, and I will say, as when I first started my business, I was not that serious about it because it was just a side
I
thing,
think,
and we had a household income. And so I wasn't reliant on that until I got to the point where I realized that I wanted to be in a different situation. And then that is when I put
you kicked it into
the
gear.
pedal, you know what I mean?
Yep. Yeah, exactly. And that's like that. And I'm so glad we asked this question because I'm genuinely curious how many people at certain revenue ranges, I bet there is a correlation between those under a certain revenue range that aren't the breadwinners. And not to say, like I said, people cannot be the breadwinners. It's just at the end of the day, it's like, I also am super competitive. So I've always been the breadwinner in every relationship, which is crazy to me. Maybe I pick them like that. I'm like, I need to be winning. We're not going to dissect Alyssa's therapy session today.
Okay. Freaking Claude keeps telling me these questions don't exist, but I know
They
it.
do.
I
You have to
know
like
we,
yell at it, tell it it does exist. Stop lying.
yeah. Let me ask the AI question. Okay. As for AI though, um, we're still talking 500K revenue, 6+
It's plus
team, 36% are actively using AI in their workflow. 28, almost 29% are experimenting but not consistent yet. 21% are curious but haven't started. and then 7% are only using within existing tools like
It's you.
QBO, et cetera. And 7% are not interested or skeptical.
That's totally cool.
Yeah.
Can I just say a little, now that I'm doing a lot of research getting ready for AI for my design, because I'm doing a whole sector on safety and I've just done a deep dive into everything, like anything and everything around AI and safety. One thing that just like come to my mind is that there's so many cloud softwares and so many things we already trust every day that are really using the same through line of like software and integration that at the end of the day, we're already all exposed to it. Like everything's already exposed in a lot of ways. Like we even with QuickBooks, like whether you turn it on or off, it's already exposed you to it. So
Right.
I'm not saying that like,
However,
yeah,
go
go ahead.
ahead.
I just think that at the end of the day, it's a decision that everyone has to make individually as a firm of what is your level of safety. Because I think a lot of people look to people like us to just tell them what to do. It's like, it's just like Google Drive. I know we have the same thoughts and feelings. It's like, look, you could tell us all that your IT is going to tell you it's not safe, or maybe some IT companies will say it's safe. At the end of the day, it's all very confusing and it's all very overwhelming, but do your best. At the end, we can't stop any of this stuff from happening or any changes to be made. It's just about being transparent with people and also understanding what are you going to allow your team and yourself to do with the data and how are you going to use it? What's a green flag? Like what can you add? Maybe it's an SOP or something simple versus what's your red flag, and having that yellow, red, and green signifiers to your team to have them understand. I think a lot of people, I understand the skepticism. I understand that totally.
Yeah. I'll also add to like understanding how the AI is built into those programs. Like Zero, for instance, I didn't start using it until I read through their whole
Yeah.
terms, software conditions about the AI and how it's built. Like
Yeah.
usually, not saying always, but especially with systems with access to financial information like Zero, they're using the Claude LLM model, but it's contained. Your information training model that is widely used. So like that feels a little safer. You know what I mean?
But that's why a lot of people don't know. So anyone listening to this right now, I'm going to tell you if you're on a free version of AI, whether Claude or ChatGPT, you need to run. Like you need to
Yeah.
immediately stop using it. The one benefit is ChatGPT will automatically have data sharing turned on. This is what I learned. Claude will not on the free version, which is cool, but there's still a toggle that does exist, but you still have risk with Claude being publicly exposed in some sort of sense because it is a free version. So if you guys are on the free version, please just commit to paying. But I will say, going to what you just said about how they're still using Claude's underlying LLM for AI within Zero, if you guys are on the ChatGPT Teams or Claude Teams version, their parameters are very similar to what you just explained, which they have just very strict contractual parameters that they get put into that they're required to stand by when someone's on the Teams paid version. Granted, you're paying I think the Teams started like $500 a month for Claude, but then you're all, oh no, for ChatGPT, Claude is way more cost effective in the Teams version. At the same time, you get what you pay for. If you guys truly want to scale with AI, you have to be willing to invest in it, but it also can save you a ton of money.
But there could be a line where it's not more cost effective anymore, depending on how much you're utilizing it and how many
Totally.
tokens you need.
I mean, you guys can be putting in systems, processes. AI is just another tool that's in your toolbox. When we're looking at how people are using things, I'm genuinely curious about the people who are actively using AI. What do they mean by that? Because someone just responding to an email with AI is not actively using AI. I think next year we could probably put a little bit more of are you incorporating agents? Are you incorporating more like autonomous AI?
Yeah. I think we should switch gears a little bit and dive into the
Are we doing the
solo.
breadwinner? One more time, because we're
Oh,
going to do the breadwinner. I really want to do the breadwinner one because I think that's the last one we could do, and then we can move on to the next one.
okay. So most of those larger firm owners are the breadwinner, 87%.
I figured that was going to be the case.
Yeah, 4% of them are partially, so like less than 50% of the household income,
Yeah.
and then the rest a no. So sorry, let me specify. That is of the group with 6+ team owners
Yeah.
or team members, and then 100% of the group that are at 500K in revenue. So it like split them up basically. Does that make sense? So it pulled those percentages weren't just the 500K group. So if we're just looking at the 500K in revenue, 100% of those are the the primary income
Okay.
earners.
Yeah. That doesn't surprise me at all.
Yeah. Okay. So I want to look now to the opposite end of the spectrum, the solo firm owners and what their breakdowns are.
I agree. This is also a good chance for people to see like what can come from 500K and what that actually looks like behind the scenes.
Yeah. And if
Mhm.
you're interested in seeing more data for the mid-range, where probably most of us fall, you can opt in and get the report.
Yep.
And I just want to reiterate for anyone that took the survey, your name and email were never associated with the
Never.
data. And that's part of why we decided we are able to build something like this, because even if I ask AI, like who answered this, like that information wasn't captured because logistically we built the survey in a system called Airtable. And where we collected emails was a totally disconnected system,
Totally
which was
different.
our email marketing. So no worries there. No one's ever going to be able to identify you.
Totally
We were
anonymous.
serious.
No one will know.
Okay. So of the solo operators, the number of hours people worked, 19, almost 20% are under 10 hours. We're going to caveat their revenue might be pretty low, but maybe not. We'll see. 40% were working 10 to 20 hours. 23% work 20 to 30 hours, 12% are working 30 to 40, and 5% are working above 40 hours, which that group means you guys, 11 of you, need to start hiring. Hire a VA at least. Get something off your plate. We don't
Do you
want
know
you
the
working
revenue
over.
ranges of this? Like, what were we in a bucket for this one?
Not yet. Not
Okay,
yet.
so
I
not yet.
wanted to just kind of start out diving
With what percent
into
of people with their hours? And then what was the percent of people for the 30 to 40 hours?
12%.
12%. Okay, cool. Perfect. Got my
Yeah.
data.
On average, 60% of solo operators are working 20 hours or fewer per week, which is great. And they're keeping 60%, 60 to 70% profit margins.
Yeah.
So that's really exciting to hear because if you're solo, you should be making at least 60 to 70% profit margin because you're not paying a team.
Yeah.
Now, the average profit margin for solo teams is 59%. And 13% of the solo firm owners are actively using AI. As far as revenue breakdown goes, of all of our solo operator responses, 35% are under 25K in revenue, which to me means they're maybe just getting started. So we can dive into like how many years they've been in business or their pricing is a little off. Oh, that was one question I wanted to look into with the larger firms, like what their average price is. Remind me to come back to that. And then let's see. 29% are between 25 and 50K, 26% are between 50K and 100K, and only 10% are between 100K and 250K. So that tells me that those people are pricing probably at a premium, but I'm interested to see how much they're working.
This also shows you like almost like the ceiling. Not to say obviously we had a certain number of submissions. So if we had more submissions, it might be a different story.
Right.
However, right now it almost tells you if you're a solo firm owner, this is your revenue cap that you can hit.
Yeah, because we did have option for people to report over 250K and nobody selected that in this group. So that means your cap is 250K, if that.
And at like a certain profit margin. Going back to, I think one of the things that you teach really well is taking numbers backwards to understand like what do you want to take home. So if we have someone making, let's just say 250K, I'm going to use an easier number, 100K. Let's just say 100K and their profit margin's only 30%. You're taking home 30,000. Is that enough for you? And so like sometimes people are like, I don't want to manage a team, or I don't want to have the headache, or I don't want this. And I'm like, but what's more of a painful headache to you? Having a team that you have to manage only Monday through Friday from 9 to 5, or you only making 30K and not making enough to actually produce and make you happy in the way that you need to in life, paying your bills and making
Right.
sure that you're stable and taken care of. So sometimes there's like a trade-off for everything. So I'm saying that more to empower people to understand that like this will most likely be your ceiling. And sometimes you have to take a step back and say, like, if I have this type of profit margin, yes, I might be cutting into it for the short term for a team, but I can now excel by using the data into 2 team members. What's my new cap? What is my new threshold, my new ceiling? Your ceiling is going to keep growing as that money, as the team grows with it, if you're managing the team correctly, because it's a whole nother beast.
Oh, yeah. And one thing I want to like also bring up one of the stats that we just saw was 60% of the solo firm owners are only working 20 hours or less a week. So even if they're only making 100K, if the average profit margin is 59%, that's still really good if you're
Yeah,
only working 10 to 15 hours a week
totally.
because you're claiming over 50K in profit at
Yeah.
part-time hours. So like that's okay. There's no wrong way to do this, but it just highlights like what is possible. So,
Yeah.
and then that other thing that we just saw, like 22 people are making between 100K and 250K without a team member. Like, how did they do that? You know what I mean? Like what are their pricing
I was just going to say,
structures?
what's their pricing? Because if they're pricing higher, then that is more feasible for somebody. But if you're pricing lower, I mean, we know a couple of those people who have a lot more clients, but they're just drowning and they have 100 clients and they're only making 250K and they have one team member and they're working over 40 hours plus and
And they
exhausted.
hate their job.
Yeah, and they
Yeah.
hate what they do, but they do it every day because there's more shame around closing it down and feeling like a failure.
Yeah.
Like, you know what I mean? The deep stuff.
Or having to disappoint clients by letting them go, even though it's like it makes sense.
You're literally losing money serving people. Like, it's crazy to
Yeah.
me how often people do that.
Yeah. One thing we were able to see though, it seems like overall, the average like sweet spot of number of clients to be served is 20 or less. That was like 75% of the people are serving 20 or less clients. Now we can dive further into that detail and figure out like, are those people even profitable? Do they have a team? Like what
Yeah.
else is going on? But that seems to be really like the size of most of the data that we got. Average 20 clients, average solo firm owner. So that right there tells you like you can serve probably around 20 clients effectively as a solo firm owner or with a very small team. And that's totally fine. Okay, so here's the breakdown of the solo earners that are making between 100 and 250K without a team. 59% are doing fixed fees, 13% are doing a tiered pricing package, 13% are doing value based. So, really, all of those essentially are the same thing.
Yeah,
It's
they
just
really
what you
are.
want to call them. And that's why we broke it down because we wanted to make sure that people kind of gave us how they're pricing, but also like those are all flat fees, most
Yeah.
likely.
Yep.
Um, and so the majority of those people are charging a flat fee. 9% of them are charging hourly, and then 4% are charging project based. And then the minimum monthly fee for recurring revenue in this category is the majority, 50%. I guess it's not even the majority. Half of them are in a 200 to 400 per month range, which
That's
still feels
crazy.
really low to me,
Yeah, I was gonna say that's
to be
really
honest.
low. If
Um,
everybody listening literally just change their clients by just an additional $50, changes your profit margin drastically. Like,
yeah.
you know what I mean? Like, it's
Yeah.
crazy
Which
to
is
me,
why
just a little.
QuickBooks keeps raising their
I
prices.
know, especially because, well, I mean, granted, if they're passing along the fee to their client, then they need to be increasing their rates. But if the client's paying for it, they risk
Yeah.
losing a client who's not willing to keep going with an increase, unfortunately, with QBO directly.
Yeah. 32% are between 500 and 750 as a minimum. This isn't people's average. This is your
Minimum.
minimum pricing. So it is different than
So you're looking
average.
at average. Did we ask that question too?
So that's the minimum pricing. But even 50, like I still feel like 200 to 400 is still too low of a minimum price. Like,
100%. Not in this day and age. Like, it's that's just
yeah,
way too low. If you guys are pricing, if you're anyone here is pricing at the 200 mark, I'd really say like you guys need to value yourselves more. And I know it's hard to value yourselves, especially I'm curious how many years in business these people who are in the 200 to 400, how many years in business they've been in. Because I'm going to probably say a lot of them are probably newer. Because I get it. Like, I also underpriced myself when I had first started because I didn't know my
yeah,
value.
yeah. There's still people that were choosing under $200 as a minimum too. There's a few of those. And then there's one person whose minimum monthly fee is between 2,000 and 3,500. So whoever you are, I'm super impressed. You're probably an advisory firm.
No, they're probably also working with construction. They're probably e-commerce or
Yeah.
niche down. I don't know if we asked the niche question, but Most
Yeah,
people
we
who are
did.
niche down, that's another reason why niching down actually allows for you to have better efficiency in SOPs, allows you to get more specific and smarter in something. Your marketing gets easier. You get to charge more money. There's so many benefits of niching down.
Yeah. And then client count in this solo firm owner between 100 and 250K, just to remind you what section of people we're looking at right now. The biggest group were between 11 and 20 clients. That was 36%. 23% were between 21 and 30 clients. And then 27% were between 6 and 10. And then there was the outliers that were 5 or fewer or between 31 and 50 clients. Just a few of those. The services that are being offered, this one is kind of tricky to look at because it was a multi-select.
Oh,
So,
yeah.
there's going to be varying results here, but 95% of this group are offering bookkeeping, cleanup, catch up, and then 68% are including financial reporting. 54% are including budgeting and forecasting, and 50% are including advisory, CFO, 50% are including payroll, 45% are including AP and AR,
Yeah.
36% are doing sales tax, and then 27% are including tax prep, and 27% are including controllership or management accounting services. So,
The fact that there's people here doing advisory and still have a minimum. I mean, obviously, advisory fee might be a little bit different than their average monthly bookkeeping fee.
right.
Really hope people, whoever's advising their clients, and you're charging less than $1,000 a month, we need to change that.
Well, yeah, I mean, to your point, my firm minimum doesn't include advisory. So,
No.
like, I was one of those responses that, like, my minimum is 500, but I still offer advisory services, but not at that price. So,
Yeah.
there's context, you know what I mean?
Yeah. I think next year we can definitely put a tier of like, what's your minimum starting price? And then what is your average client fee? Because my minimum, just because, so at my firm, how we did it, our minimum was 400. The average was, I think, 695 or something like that was the average. So like, I think that's a little bit different than like someone giving, but you said there is an average.
Yeah, we did
Okay,
ask
we did.
that.
Okay, perfect.
So, one point of data was the person that whose minimum is 2K to 3,500, they have 5 or fewer clients, like that person
Love
specifically.
that.
So,
They're probably working less hours, living their best life right now. Hell yeah, dude. Love that person. If you're listening right now, hell yeah.
yeah, which is the cleanest path to 100K or more in revenue with burning out, hopefully. Hopefully they're not working that much.
Yeah.
Um, okay, so what's the average client fee across this solo group in 100K to 250K? And the biggest group was 36%. The average fee was between 3 and 500. That still feels super
Oh,
low.
no, that's so
And then
low.
13% were between 1,500 and 2,000. So that is better. 22% were between 500 and $750 on average. So that seems like the most realistic bucket. So the majority are averaging 300 to 500 per client. When you pair that with the client count, it shows that most have 11 to 20 clients. So then when you multiply the 15 clients times the 600 a month average, that's when you get like your 108K a year.
Yeah.
So hopefully that illuminates for some people like how you can actually hit 6 figures with
Yeah.
a lower amount of clients, but that means your minimum needs to be higher.
Yeah, the minimum needs to be higher, or like increasing the current, or maybe you guys just haven't done evaluations. Because I do know we asked this question at one point, asking people how their average number of people who actually raised their rates in the year. And because I remember doing an Instagram reel about this, that raising the rates, I forgot what the data was at the time, but essentially a lot of people did not do a raise rate in the past couple of years. And that's also a bigger problem. Like the bigger problem is like we need to make sure we're increasing fees. Like things have changed. I know we talked about this in the first teaser podcast where we talked about AI is making things a little bit easier. But guys, just because AI is making it easier, my philosophy is if you're going to lower your rate because bookkeeping is now getting easier, it's to have the long game of an upsell process into a higher fee into advisory. So you're essentially doing what we call here in the course world, where you're creating just an entry level offer that's just getting people in, because once they're in, people who are buyers once are buyers twice. And it's easier to sell someone who's already on your client list, which we both see this all the time where people are so desperate trying to find new clients. But it's like, you probably have clients who are willing to pay you more, but you haven't ever told them more things you do. Or people will be like, oh, I told him I do payroll one time on a call in passing. You think someone's going to
Yeah.
remember that?
Like onboarding, already overwhelmed with everything
Yeah.
else you're asking and
You don't
telling them.
remember that until it's 3 years later and they find out, hey, I'm introducing you to my payroll company that I'm going to do payroll. You're like, what the heck? Why didn't you tell me? I could have done it. I don't know you do payroll.
Or to the advisory point, like, because I work with so many
Mhm.
accountants and bookkeepers who want to offer advisory, and it almost feels harder to offer advisory to someone who is seeing you as just a bookkeeper. So there's a whole shift that has to happen in the way you carry yourself, your confidence, and all of that, which I actually have something coming around that. So
Yeah.
be on the
And we covered a
lookout.
little bit this too in Advisory Edge, that session we did where, remember, I gave them upsell emails, the emails to give people the chance to, if you guys are in that position, which there obviously Serena has like way more resources diving into this, but we did give an email template for those who are like, how do I get clients to tease them these advisory services? Because it's like, sometimes just pitching it to someone won't immediately convert them if they don't even know what's to come. But there are ways to do that in a way where you're almost like teasing it out to them and like giving them samples of what that would look like so they can see the potential and then want to move forward with the potential. So that was a really good session that me and you did where we talked about a lot of those different things.
Yeah, we'll link that in the show notes too. It's a really great workshop.
Yeah.
Okay, so to your point about raising prices, overall, only 30% of people did in the last 30 or the last year.
Yeah.
And about almost 30% only raised to new clients, which is good.
Yeah.
Raise the price
It's easier.
every new client comes in because that's how you test the
Mhm.
market, what it's willing to pay. And so
Yeah.
if you don't have that process in place of testing where is the ceiling for the type of clients you're working with, like
Yeah.
you're gonna stay way lower than you could.
Yeah.
Um,
And one thing I will caveat on that, just because one person tells you no and you're expensive does not mean you're expensive across the board. There are people
right.
out there who will value what you do if you position yourself, because everyone's like, but everybody else does bookkeeping. I'm like, and that's your problem because you just find yourself being just another bookkeeper. If you have a mindset of you're just another bookkeeper, you'll always be just another bookkeeper. But if you're someone who's like, I'm so unique, I have a different stance, I come from this and I do that, that is gonna exude. That's gonna shine out and make it really easy for you to find people and attract people. Confidence goes a long way, baby.
mhm, it does. 18% did not raise rates, but they're planning to.
We're doing bunny ears. If you guys can't hear the bunny ears, those are bunny ears. Anybody who's saying they're trying to do something means they're not. Guys, trying is not
They're
doing.
planning to. Yeah.
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 Doing is doing. Like, are you going to
Yeah.
do it? I would say, let's just give them a little bit of a task. If you are here right now and you are one of those people who said that you are going to or planning to do a price increase, I want you to say and commit right now while you're listening on a piece of paper, the date you are going to do your rate increase. And I want you to commit
Right.
to that right now, because right now, if you're saying somewhere in the future, there's always 10 million other projects that you will put in your way, not knowing subconsciously that you will put in front of your way to avoid have a hard conversation. There's something I saw the other day that like changed the way I was thinking about something that I was dealing with. It said something along the lines of, your inability to have a hard conversation means that you're willing to make less money. So you're willing to make less money to not be in an uncomfortable position and tell someone about a rate increase. 9 times out of 10, every client's like, okay. Like literally. And everyone always like, I hear it all the time in breakthrough where people be like, oh, I did all this rate increase and I lost 2 clients, but I also upped 10 of them. Now I have less clients and I'm making more money. And everyone was like, hell yeah, you deserve it. It's like people are so fearful of losing the 2, or they think everyone's going to leave them. Not everyone's going to leave you.
Yeah, most people are not going to leave you, like statistically, as long as you've been delivering. And if they were going to leave you, there's probably another reason besides price that they decided it's not worth the increase.
Yeah.
So if you are going to increase, you got to make sure that you're actually delivering the value worth the increase. I mean, a $50 increase doesn't warrant changing any really much, but if you're going to do $100 to $300 to $400 increase, hopefully you're matching that value, or you've already been providing that value and you can show them.
Right. You just have to restate it to them that like, we've underpriced you for quite some time, and that's based off market research. We're deciding that we're going to move forward in this route, which is actually meeting what the standard average fee is for a company in your position. So at this point, you've kind of gotten free services. That's how I pitch it. I'd be like, you've pretty much gotten a really good deal up into this point. And like, when you pitch it like that, it's almost like, okay, Like I've just been getting a deal
Yeah.
this whole time. It's everything is all
Yeah.
about the way you pick it and the way you twist it in a good way.
Yeah. Absolutely. Okay. Is there any other piece of information that we wanted to dive into in this six-figure range with a solo owner? I'm going to ask about the AI, I think.
Cool.
Okay. So 73% of them are engaging with AI in some form, which is in line with the overall survey average, but only 3 of the 22 people in this range are actively and consistently using AI, and they're already hitting 100K without it. So that raises the question. If the people who have figured out how to clear 100K, 6 figures on their own are mostly just, what this is saying is most of them are just still experimenting with it.
Yeah.
Meaning they're probably not gaining any return on that time invested.
Yeah.
What happens when they actually lean into using it?
It's not a magic pill at the end of the day. So like I think a lot of people think that like all of a sudden AI, they're going to start using it and someone's going to tell them one profound way to do it and all of a sudden it's going to change your life. Here's my philosophy. If you don't know your own processes, if you don't know your own audience, you don't know your own marketing strategy, you don't know what you want, you don't know your values in your business, you don't know where you want to go, AI is not going to help you. AI can only help you if you have clarity. And yes, AI can help you get clarity by interviewing you. So this is my biggest tip is like have AI interview you. Like ask it, have it ask you questions about your values. What is your vision? Have it help you paint that picture, but it's never going to be able to do it for you. So I think people are trying to, when they say like they're getting into it, but they're not really like leveraging it, it's probably because they're hoping that it's going to magically like solve my onboarding. Just like me and you, we're not going to give you our exact step-by-step processes and SOPs in our business because it wouldn't help you because your values are different. We're best friends and we still have way different ways that we run the firm. Like there would be no reason why I'd come in and just give it to you. You would just be back to square one. And I think that that's the problem right now with a lot of people is that, oh, well, maybe if I start using AI more, I'm going to all of a sudden make way more money. That's not true. If you don't have clarity, you will not grow, regardless of AI, regardless of SOPs, regardless of the process. You don't know where you're going.
Which is what this basically says. Like most of these people have already, like 23% are curious but haven't started, and another 4% are not interested and skeptical, which means 27% of this group of solo firm owners that are already at 6 figures aren't using AI. So that means if they decide to adopt AI, they can just probably exponentially grow their results
if used
correctly and not get distracted.
Yes. If you're actually using it to produce revenue, like and actually move the needle and make life a little bit easier, but not to replace the team. Like, I mean, I know they don't have teams.
They don't have a team. So it's like,
I know, but there also be the question of, there's a lot of people, when I did my workshop recently, a lot of people were like, when we asked them, like, what are their biggest reasons why they want to adopt AI? A lot of people were like, I just don't want to manage people. I just want to manage. I'm like, you guys do realize you're still going to manage something. And AI still talks back. So let's be real. And also, guys, AI is biased and it hallucinates. Like, I would way rather have a team member that's managing some sort of AI. But at the end of the day, that was a big thing. So like, there could be a lot of people in this bucket as well who are using it, but in replacement to not have to hire a team. And that's probably why they're capped at only staying at 100K is because they refuse to hire a human because they don't want to manage a person. Once again, going back to, I don't want to feel discomfort. So therefore I'm going to do the easier thing, which is actually hindering my growth.
Yeah. But if there's, 13% of these people are actively using workflow or actively using AI in their workflow, what that means is they're probably successfully using it. It's probably helping them hit this number. They can probably go further with humans or additional AI, but like these people have already developed some sort of skill in managing the AI and directing it. Like you can translate that skill to managing and directing people.
Oh yeah, totally. If you know how to prompt AI, you know how to prompt a human. Like if anybody here's ever like prompted AI and very vaguely, but you probably also talk to your team like that. And then you wonder why you have really crappy results. It's because you have to give them context, information, details. I'm actually really curious about the people who are using AI. So I think you said it was the 13% of people. How many hours are they working in comparison to people who are not using AI?
Okay. So of those using AI in some form, This includes all types of AI, not just using it in their workflow, but of some form. 43% of them, almost 44%, are still working between 30 and 40 hours a week.
Exactly. So AI doesn't magically fix. And sometimes AI actually makes it harder to work because you have
Or it
more.
makes you work more because you're distracted and you're like, what else
Yeah.
can I make AI do that I
Yes.
wouldn't have normally done?
Yes. And I think that this is something that a lot of people really think that it's going to change your life and it's going to be this, but it's all about like not getting yourself distracted. It's
Yeah.
also, people are probably using it really inefficiently, or they're prompting it really terribly, or they don't have a system for communicating it, or they don't know. Like for me, I just built, this has nothing to do with the accounting industry. And I know I told you this, but my biggest hiccup is right now trying to find a new RV site. And I actually built an agent that actually goes out. I just tell it what, like where I want to travel to. And it literally clicks into each and every RV site to tell me what's available. That right there just saved me a bunch of hours. But me going on and like finding a Claude prompt that's going to tell me pull all the RV resorts. Sure, that's great. But now I'm still having to physically go into each RV resort. So I think that that's where most people, the level based off the workshop I just hosted, everyone said they were level 1 and 2, which a lot of people have not even explored 3 and 4, which is agents and real automation through AI. And so right now, a lot of people are going down this rabbit hole of trying to like do level 1 and level 2 and obsess about it, but they're spending way more time. They're having bigger headaches because they're on AI all day, and they're not actually moving the needle because they keep getting stuck and being in a little hamster wheel.
Yeah. So what's also interesting is the group of people in this revenue range, solo owners, 6 figures, that are not using AI. 16% of them are still only working 10 to 20 hours a week.
Yep.
50% of them are only working 20 to 30 hours a week.
Yeah.
And then a couple people are still working above 30 hours.
Yeah.
Or 40 hours, sorry.
And that checks out. And at the end of the day, it's like AI can be a good tool, but it also can be your biggest distraction. And it's a matter of how you use it, how you leverage it, and how you're going to incorporate it within the firm. So a lot of people think it makes them faster, but like I said, it's because they're using it at the most basic level and not really to do things autonomously and actually in automation format. And also, guys, instead of using AI, I would really go down the rabbit hole of automating more things. I mean, I'm all about AI, but I think automating should be the number. I mean, how long ago was Zapier introduced and people are still not using Zapier to its capacity? And everyone in this industry is fearful of AI replacing them. I'm like, yo, you guys thought Zapier was going to replace you. And here we are 7 years later and y'all are still not using Zapier.
And Zapier is now so much easier to use because it has an AI agent.
Not have AI, yeah. I started going down more of the N8N route, which is way more powerful than Zapier, but I do not recommend it to people who have not mastered Zapier first.
Yeah.
That's where I built my agent from, but it's incredible.
The question about niching, 31% of this group are, yes, they are niched. 32% are working on narrowing their focus.
Trying. 20 years.
Yeah. Well, there is a transitional period when you decide.
I was joking about like how we were saying earlier, the trying. There is a transition period though, because you have to let go of like all your prior clients to move into serving the clients that you want to. Yes.
And an evaluation process. There's a whole thing.
Yeah.
And 23% are generalists by choice, and 9% are niched by a client type. So instead of an industry, that first one was by industry. And then one person wants to niche but hasn't yet. And they're still hitting 6 figures. So that's interesting. Great. I would probably drill more into that detail and be like, okay, what else are they doing? Like, the services of those in this group by AI usage, most of them are doing cleanup, catch up, and bookkeeping, financial reporting, budgeting, and forecasting. So it seems like, and a lot of them are offering advisory CFO. So what we can kind of glean from this group of hitting 6 figures is you do have to have an elevated service to be able to command those prices. So obviously we could spend literally all day diving into all of these results.
Numbers and stats because they're nerdy and fun.
But in the interest of, there's so many different angles you can look at this, but you can still get the free PDF report. Go to ambitiousbookkeeper.com/survey or workflowqueen.com/survey.
Use my link because we're competing over here.
Any closing remarks that you have, Alyssa?
No, I think at the end of the day, just the biggest reminder is that just because on paper someone else did it a certain way doesn't mean that that's how you have to operate. Like at the end of the day, like this is all data that's just going to help you, but it's going to show potential and opportunity. But really make sure that you reflect on like what feels good for you. Like what feels good for the way that you want to operate your firm. How many clients do you want to serve? If you're really happy with only charging $200 a month, then stay at $200. If you're happy, like just know that this is just data that helps to empower you, not to discourage you.
Yeah, absolutely. Well, thank you so much for meeting with me and diving over into these results. And we're really excited to share them with everybody. So, yeah, we'll talk to you on the next episode.
Bye.
Thank you to everyone who helps make this podcast possible. Content and interviews are produced by me, Serena Shu. Our intro and outro music is written and performed by my brother, Ian Gilliam. Editing is also by Ian using his awesome sound engineering skills along with Descript software. Hosting and publishing is by Buzzsprout. And you can check out the show notes for links to all of these amazing resources and resources mentioned in the episode.
Be ambitious.
Can I let you in on a little secret? If you're still manually sending proposals, chasing signatures, or onboarding clients through email ping pong, you are doing way too much. That's why Kendra and I created the Dubsado Decoded private podcast series just for bookkeepers like you. It's totally free, it's only 7 episodes, and it's in a private feed where my systems expert, Kendra Courtney, and I walk you through how to create a seamless automated client experience using Dubsado. We cover how to simplify your onboarding, boost your confidence, and actually impress clients from day one without spending hours on admin. And yes, it's free, private, and bingeable in under a week. And starting July 6th, Dubsado Decoded, the course, will be on sale through July 12th. So head over to ambitiousbookkeeper.com/Dubsado to get access and hear about when the sale goes live. Again, that's ambitiousbookkeeper.com/Dubsado. The link is also in the show notes. I know you're going to love it.